Hey all, Tom Weller here from forexreviews.info. In previous videos I've shown you guys how to trade the significant engulfing candle. I still get a lot of requests for, like how to trade the 15-minute chart successfully because, as you guys know, I do trade that time frame quite a lot for a lot of my intraday trading. And so in this video I'm just going to show you guys in a nutshell, how you can trade this time frame as well, and how to find really good setups based on whether it's the trend or a counter trend trade. And so yeah, anyway, let's get into it and I'll show you how I actually view the market. First of all, what I'm going to do is I'm just going to have a completely clean chart. There is no support and resistance on here. I'm going to let the market decide that for me right here now. But I know, the thing is, once you've been trading for quite a while, you do start to be able to see these natural flows over and over and over again. And when market does find weakness at certain points, you do know that they are natural, like resistance or support zones. So let's just let's just trade from that perspective. Let's look at the evidence once we get a bit of weakness at an area, and then let's look at what the trend's actually doing and what it's actually saying as well. Okay, so let's look at some recent price action. Okay, so I'll just pull this back, allow it to be pulled back. Right. Okay. Right, so this is the close. Just had to zoom in a bit. Alright. Okay, first of all, so this was a resistance zone, right? So let's draw that in, right? Price came up, pulled back. That makes it a resistance, right? Now this is an uptrend, remember? This is the GBP US on the 15-minute chart. Now, so this gave some evidence that price was selling off. So by the time it came over here and retested again, and we got some bearish price action, that did give us a nice counter trend trade. So that's an example of, looking at the evidence. You got multiple confluences. You got a resistance where it's proved it in the past. Then you got some nice price action. You got that pin bar there, and then you got a nice little sell-off. Now, where would you place your stop in that situation? Very tight. Just have to have your stop above the candle, right? Doesn't have. You give it a few pips room movement. You can give it a little bit more, like that. Right. So that's, just showing you that's one confluence. You got price in the past showing rejection of that price, and then you've got, always look to the left, guys, and then you've got some price action showing a bearish signal. Okay. Now, let me show it the other way around, because this is an uptrend. Okay, so what you do, okay, first of all, this is an area, remember? Okay, so this is a resistance area that we got that evidence from. Now, like I said, you like to draw it to the bodies, right, like that. Okay. Okay, so when price did finally break above, okay, which is what happens in uptrends, there's always usually a pullback to previous structure. And like I said, here we go. See how this is a resistance zone. Price pulls back to the pip. Now this happens basically every single time, guys. Right? I'm going to make these arrows a little bit bigger. And that gives you a trend trade. So you have price action, right? You probably wouldn't take this trade, but it's just showing you the rejection of this price. This is a trade. This is the candle you would take the trade on. See, this is nice engulfing right here, and then the price went up. Okay, so it is showing rejection though on that candle. It's just not a great candle. So first of all, we've got those two signals there. We had the break, the pullback, then getting some bullish price action from that break area. Okay, so get rid of that line. So it's a zone, right? This is what I'm trying to emphasize, is support and resistance areas are zones. Okay, so when price broke up above, we're looking for more evidence of another trade. Okay, are we getting it? We're getting it. We don't actually get a nice drop until, let's see how many pips this was. Oh, that's 34. Okay, it's okay. All right, so we can draw that line in, right, around that zone. Now, the price amount is not really that important. Okay, so let's have a look. Okay, so if we look across now. Now you can just eye these up with the eyes if you're looking to the left. Now you've got this nice price action here, right? Evidenced from here, it dropped over 35 pips, right? So it was a decent fall, right? And your risk is just above the candle, right? Okay, get the evidence, price action, and then this is a counter trend trade. Like you guys know, I don't care about whether I don't care so much whether I'm trading the trend or whether I'm not trading the trend. You know, if the market is giving evidence of a counter trend trade and the risk is small, I'll still take it. So I do much prefer to trade the trend. That does give you another level of confidence. So the choice is yours, guys. Like, you can just keep trading the trend. You can trade whichever way you like in the Forex market. Okay, so now you can see we moved down, we produced a lower high, and so you would have been watching this area when it came back up here to see if we get, you know, another sell-off here, but we didn't. The price action just kept rocketing. So you'd be watching this green area here. Did we get a sell-off here? No, we didn't. We didn't get any bearish price action. What do I mean by bearish price action? Well, for starters, bearish candle, a bearish engulfing, a bearish pin bar, those sort of things. They're the sort of things you're looking for so that you've got a place where you can put your stop above and enter the market. We didn't get that here. So as you can see, we did another buy trade. So now what happened is, look to the left, this was resistance, okay, in this area. So price broke above and it formed a pin bar right on that resistance, right there, just to tell us that yes, we've come down to this, and then we're seeing it as support, right? So was this a good buy opportunity? Yeah, well, it's a good trend trade buy opportunity. Now, where would you place your stop on this in this situation? Well, you have two options. Like say here, right? We've broken above, come back, and it's rejected it. You have two options in this situation. You can place it below the previous candle, like that, or you can place it for trend continuation below the previous low, which is right down here. Okay. If you're placing it right below the candle, the previous candle down here, or just giving it a bit of room below that candle, well, either way is a good signal. As you can see, we've got a better signal here, this candle here, and the price took off. As you can see, went up 172 pips from there. You probably would have gotten out here. You see this first bearish candle? Even though it's not a sell signal, you did get the evidence because you got the first bearish candle. It's got a bit of a wick on the end. We're getting wicks, and then finally we got a nice wick here. Okay, so let's move along. So we got that evidence there, and then we entered the market. So you could have entered the market there or here. You put your stop below the low. Okay, so now that we're up here, okay, we're getting some evidence. We got some rejection here. Price went down. Let's have a look. 24 pips. Okay, so we know this is a bit of rejection zone, like a resistance. So what you do is you draw in your line. You just make it so that, okay, so if price comes back, we'll draw it up to here. Okay, so that's exactly to the bodies. Okay, so now that we know if price comes back, gives a rejection candle, we can enter a trade. Okay, so did that happen? And we know that these are zones too, guys. It's not exact, right? So, okay, here we go. We did get one bearish candle, but it wasn't bigger than this candle, so it wasn't good. And then we had one more retest up here. This candle was pretty good in this situation. It wasn't perfect positioning, but if you did enter this trade saying, okay, this was a good sell, let's say you did, right? Even though it didn't go all the way back up to retest this line, what you would do is you place your stop above the previous pin. And why would you do that? Well, the reason being is that if price gets above that pin, it's most likely going to keep going higher. So that's where you want to be out. Okay, so let's say you entered after this. Well, you know, This is not perfect because it didn't come back up here. And, you know, if you had your alarms here, you wouldn't have actually heard it. So this is just a what if situation. Okay, so what if you know, you did take this, then you would have had a nice trade. Okay, so now let's look at the meandering. Okay, first of all, now let's look. This is a bit of like the previous one I did. Right, we had a lower high, and so this is a little bit of continuation trading now, guys. I'm going to show you, and this is like a bit of a switching your mode here. So, and we formed a bottom here in this lower high, right here. Okay, just right here, right? So we formed this, price came down, formed this lower high, and then we broke it. That was the first sign, right, of a rejection of, you know, like it's a mini downtrend in a major uptrend, right? So that was the first lower high, right? So we had the first lower high and then it broke below. That's a bearish sign, right? Okay, on the 15-minute chart. Now, as we all know, what usually happens is we broke this level and price will come up, forcing a lot of the sellers out of the market, comes back to this previous support, like minor support area, and then we get a sell-off, right? And that's how you continue trend trading, right? When the market is, you know, this is just a minor trend, by the way. We don't know how long it's going to last. This is where the major structure is. So it could just come down here and then go back all the way back up. But I'm just showing you guys here is what to look out for. Now, see, I'll just show you the next one. Okay, so price came up here. This gave a sell opportunity, came down here, and it broke below again. Pushed back up again, gave another sell signal right here. Okay, and you see what I'm saying? It just keeps breaking support, comes back to retest as resistance, comes back down, and price will just keep doing that. And it can give really, really high probability trades while the market just keeps doing that. Okay, so, and continuation trades. Okay, so I'll get rid of these now. So that's a little bit of what I'm looking for on the 15-minute chart. Now I'll show you a different aspect. Let me just get rid of everything. Little tip. What you can do, okay, this is the daily chart, right? So we'll just draw those lines in again. So these are just all the daily lines. Like so. Right, and we do know that this is a daily line as well, don't we? Just make sure of that. Yes, right there. Okay, so okay, I've drawn in all the daily lines. You could say that this one's 1, 2. Okay, you can see you got the bottom and the top. Okay, so now that I've drawn in all those lines, well, the closer lines, we don't need to have them all in there because we're just looking at close price action. Now you can go back to the 15-minute chart and you just set your alarms at these price zones, right? You just want to see what price does at this area. Like as an example, see them as support and resistance zones. So when price is coming down to it, it might bounce off it, right? And remember, these are zones, like, you know, see how this looks sort of like this could have been all the way up to here. So just remember, these are zones. So, you know, often price can be like within 20, 30 pips or maybe even 40 pips within that zone. So these zones can be quite cushioning, quite a bit of space between them. As you can see, they do line up like quite well often. And what I'm trying to say is you set your alarms at these daily support and resistance lines, as you can see on the chart, and they're all drawn from the past, right? And then this is recent price action. So when we're on the 15-minute chart, you can have your alarm down here. Look for bullish price action to get a pop, and you could have your alarm here to look for bearish price action for a pop. Now, if it breaks through, well, price action is going to usually indicate that it's going to be a breakout, So you're waiting for bearish price action before the entry up here, and you're waiting for bullish price action before the entry up here. And that's a really simple little tip you can use on the 15-minute chart. It actually works on all time frames actually, but it works really well on the 15-minute chart. And you can usually find you'll get easily like 40-50 pip pops at these major lines over and over and over again. Sometimes they can go for like, you know, over a week of one area being supported, which can give multiple opportunities, like, you know, as an example, sometimes up to 8 or 9 opportunities in a row. Buying, taking profit, buying, taking profit, buying, taking profit, buying, taking profit, or selling, taking profit, selling, taking profit. And the price can just keep going up and down, hitting these resistance zones over and over and over again. And the 15-minute chart can give that like a lot of opportunities during that process. So it's just giving you a bit of an eye-opener on, you know, what I'm looking for on the 15-minute chart. So we'll have a look at another different pair. We'll just have a look at the Australian for a second. Okay, so this is the Australian US, and you know it's not much different. Now, as an example, let's just have a look at the significant moves on this pair. Let's not put any lines on it. All right. So first of all, we're looking for evidence. Okay. So let's have a look to the left. Actually, I will zoom out a little bit just so we can have a little bit of evidence. As you can see, let's look at actually the recent one, right? Price came racing up to here at 95, and then, you know, people started taking profit and the market started falling down. As you can see, it had over 30 pip move from here to here, right? So then we knew that we had the evidence for if price comes up here, it's most likely going to keep going down as long as we get some nice bearish price action. So if you look to the left, you can see it had an opportunity here. Right, we can zoom in. Had an opportunity here. We also had an opportunity here if you hadn't gone in on that opportunity, that nice bearish candle. This one's not perfect because it's not bigger than this previous candle, right? This one's telling you the sellers are getting in because see how this candle here, it engulfs all these areas in the chart. This is what you want to be looking for when you're looking for a bearish engulfing, right? And as you can see, this line, I've just gathered this line from the evidence that I've got right here, right? I see the price is getting exhausted here, exhausted. Okay, well, I will consider risking a sell. Now, where do I place my stop in this situation? Well, just above, right? Because I know that if price rallies up here, and let's look at this. So I entered on this trade, the stop is 25 pips. Say I entered on this trade, like after the bearish engulfing, the stop is 28 pips. Very small stop. Now, how far did the market go down on both these opportunities one could have taken? It went down 65 pips, which means, you know, you're risking about 25 to 30 pips, and it went to 2 to 1. So this just goes to show you, you know, like looking to the left, looking for nice price action to what the left is saying, and reacting to that price action can be very, very beneficial. And this is what I'm trying to say about looking for evidence in the Forex market. Basically, it really does help. So, let's see if we can see any other ones. Let me zoom out a bit so we can go back a little bit. Okay, so here we go. Here's an example. All right. We had pump, like, it zoomed up here like the weekend before, and then price fell down. In fact, it fell down, let's have a look at this, 64 pips. So you knew that this is where a lot of buyers got out and this is where a lot of sellers got in. So what do? You don't jump on the market when it's down here. You wait. You set an alarm here, get trading alert, and you let the price come all the way back up. And then when it comes back all the way back up, let's zoom in so we can see this in detail. Look at the left. We've got the evidence here. Right? And then you're just looking for price action right here. So let's have a look at this. All right? Okay. And this is like mentioned in my secret double tap trading strategy as well. It's very similar to that. Okay, so this first candle, not so perfect. This second candle, yeah, really good. Why is it good? Well, it's bigger than this previous candle here, and you look to the left, and it's quite big, and it's also breaking into the lows. Where would you enter the trade? Well, like I said, when it's got a little bottom here, you want to enter just after the candle, right? You want the candle to go lower. So this shows you that it's broken below this mini little low here, and the market's moving down. Now, where would you put your stop? Hope you guys know this one. Place your stop above the previous high. Give it a few pips room, to cover spread and stuff like that. So what am I risking here? I'm risking 24 pips. I've got evidence. Boom, boom. What happens if I lose that trade? It's okay. I'm losing just 24 pips. All right. So if I just took it down to the previous low, which is right here, nice safe trade, right? Just taking it down to the previous low, I could take it for, about 45 pips quite comfortably. Is that a 2-to-1? It's pretty much a 2-to-1. Now, could have I held it longer? Yeah, I could have held it for a near 3-to-1 on this trade. And I'm just showing you the potential here. Look to left, look for evidence, look for price action before you get entry. And you're looking for significant candles. So let me zoom out now. Okay, now that I've done those ones, okay, let's see if we can find another one. And you do get these mini ones where price is in between zones. And these are happening all the time in the Forex market, guys. All the time. Like a lot. As you can see, like when price sold off here, we had a high here that sort of fell down from. And then when it came back up to retest that high, right, it's not even that, it's not even a big high. When price came up to retest it, the Australian generally is not always a volatile pair. It came back to retest high, then came back to retest high. Now, I wouldn't have taken that because that wasn't a big enough drop, but to retest. But as you can see, when it did fall, it broke these previous lows, and we got this nice significant candle. What do I mean by significant? Well, it covered all these trades. Now, where would you place your stop in this situation if you took a trade here? You would place it just above this high, which means you are risking 22 pips, and let's have a look. That's 15, went down 37, went down 47. Okay, so as the market was moving down, you had a nice trend continuation trade. The market moved down 50 pips. Is that a 2-to-1? Yes, it is. It's more than a 2-to-1. Okay, so okay, and let me just show you some other spots here. Let me see. Well, you can see we've got one here. Price came up, fell down, looked to the left, came down here, gave some evidence, went down like about 25 pips. Then when it came back up here, it did fall down again. Just a small trade, but it gave an opportunity. As you can see here, the price came down. Retest this level, price came down. Now you're looking for good price action when you're at these areas, and you're looking for minimal risk. That's all you're after, right? So this allows a trader to be able to trade multiple times and read the market at the time what the market is basically saying, So this gives you that edge on the 15-minute chart. And, this is lower time scale trading. I know it is a lot more riskier than higher time scale trading. That's why you're looking for multiple evidence. Now let's look at this one again. You don't want to just be guessing the market. Price came all the way down to here, showed multiple bounces, right? Did you trade this? No, we're looking for evidence. We've gotten some evidence now here. So we know that when price comes back here, right, we had like basically 3 little bounces here and one that bounced nicely. Let's have a look at this bounce. About 37 pips. So we knew that when price came back here, we could get another nice bounce, right? And did it? Yes, it did. Even if you just took it to roughly the previous high, had a risk of about 16, 17 pips, virtually nothing, and we had about a 30 pip gain up here. So you could have just taken it to, 25, 30 pip, or just a bit more than a 1-to-1, right? You saw these previous highs, or if you're just aiming for these previous highs around here, you would have got it up around here, right? Which is a nice 2-to-1. So, okay, now we can keep going back here. And we can keep looking for these over and over again. Let's have a look at this. Price came down here, broke above this resistance, which now looks like it became support, which is very common, remember? Resistance, it comes down, breaks up above, comes support. Remember that, guys? Now we got some evidence of a buy situation right here. At this support, right there. Boom and boom, right? Bam, bam. So when price came back here, if we get some nice bullish engulfings, we know that it's worth the risk to buy. Right? Right. So where do we place our stops on these two trades? Well, we just give it a little bit of room below, like so. Okay? You're waiting for the price action. You're not entering until after the price action, guys. So you give it a little bit of room below, like I've been showing you, because, you know, sometimes the market goes down a little bit further, you know, and occasionally you might get stopped out if you put your stop a little bit too tight. So you've got to be cautious of that. Let's have a look at this one. So let's say you entered a trade here. This is a nice, it's a risk of about 15, 16 pips, right? Like I said, give it a bit of extra room. And you can see it went up 23 pips. 23 pips. And you can see that that's pretty much the recent high here. So that could have been a good take profit. A little bit more than a 1-to-1. Okay. Then we had another retest of this level. Right? So where do we place our stop here? Well, we just placed it a little bit below. Right? We had a nice pin bar. We had this nice to the left area that we knew the price was bouncing. Now, if it comes down and if the next candle comes down and breaks it, we want to be out. So that's where we put our stop. Right? Okay, we're looking to the left. Market's giving clues that this is a bounce area. We're only going for up here, this sort of area, guys. So because we only got to this area. So we're just after a bit over a 1-to-1. Okay, so this is a risk of 16 pips. And, you know, around 25 pips. That's more than a 1-to-1, guys. This is your risk reward getting better. You know, it's looking at the market. It's giving good risk reward. Now, situations like this do happen occasionally where the market, this is obviously some bad news. We didn't get any evidence there, unfortunately. Let's zoom out. We'll see if we can get some more evidence. Okay. Oh, you can see one here. Price bounced and moved up here. Then we came back to that price zone and moved up higher. So these things are happening all the time. Here's an example of one here too, guys. If we pull this down, this is actually because this is a support and resistance zone. You know this, guys. Okay, I hope you're getting a bit better at this, I'm sure. So what I'm trying to say is this is a resistance and support zone. You know that. Let's look to the left. See? So now let's zoom in here. And we'll pull it back. And as we see, when price was underneath here, okay, we broke below this supporting area. And as you can see, when price is below here, we've got the evidence here that this is not a great setup though, guys, but we got some evidence that this was a resistance zone. Price went down. Let's have a look. About 16 pips. Okay, so like I said, not perfect because the price didn't really. I like the price to move down at least 30 pips or so before when it's a retest in order to risk a trade. Okay, as you can see, the price did move down quite nicely on this retest. As you can see, evidence to the left, rejection. So and the thing is, the price action traders are always looking for evidence of what just happened recently in order to know what to do next. As you can see here, resistance zone, now is support. Right? Okay. And here's another example. Another beautiful example here, guys. Okay. Right. Okay, we got this evidence to the left here. Price. So we can set our alarms here. Price went down about 25 pips, yet, so that's okay. Alright, so did we get some price action here? Yes, we did right here. Where do we place our stop? Just above the pins, right? So entry here after that signal is about 19 pips. Did we go to more than 1-to-1? Yes, we did. And as you guys know, you always lock in at a 1-to-1 on all these trades, or you can always lock in at beyond the body size of your entry. Okay, so just wanted to show you guys that. This is how you can trade the 15-minute chart successfully. You're looking for evidence to the left. You're looking at what major resistance and structure zones are doing. You're looking at what the overall trend is doing in the on the higher time frames. But most of all, no matter what the market is overall doing, you want to always look at what recent price action is saying. Let's look at this. Let's just look at this last little bit of price action. So this was a support. Like the price came down here, it bounced up here, right? Right, went up 27 pips, right? So we have to say that was a little minor support there. Then when price came all the way over here, gave some bearish evidence right here, and then what happened? The price sold off again, right? Minor support becomes minor resistance when it's underneath it. Once it's broken, price often retests it. This is called the retest. Some traders call it the last kiss, and it can give some really good trend continuation opportunity in the Forex market. And so, you know, whether it's on the 15-minute, the 5-minute, the daily, the weekly, a lot of pairs do the last kiss over and over and over again, or the retest. I call it the retest, guys, and you've probably heard me say it in many different videos before, is the retest. Okay, so that's my that's my video for the day. I just wanted to share some a little bit of extra knowledge about the 15-minute chart. Hope this has helped you guys. If you're wanting to know any questions relating to this, just feel free to comment your questions below, or your thoughts. Yeah, I do answer, like as an example, if you're commenting on YouTube, I do read all the comments. I don't answer them. I don't obviously always answer them all, but I am reading them. I do appreciate them. I appreciate all the likes, guys. So just don't forget to drop some likes as well while you're there, and also share on Facebook, etc., etc. All likes and shares are appreciated. Okay, thanks for watching, guys, and I'll speak again soon. Bye for now.